Hey, good evening, everyone. You can hide your beer, Sam. I'll trade you my iced tea that I have here for your beer. I've got a cup of sweet iced tea here. My wife said that I can't drink beer when I'm doing one of these webinars. She's probably right. So anyway, how's everybody doing today? Tuesday, April 12th, 2022. This is Rick, for those that don't know. Glad everybody's here. Thank you so very much for being here. In fact, really appreciate it. Oh, John, all great things start with someone saying, hold my beer. So true. Hi, Julie, Mai, Moto, Phil. How you guys doing? Bring you wisdom, Jim, Slim. Well, I'll do my best, okay? Hello, Carol. How are you? Glad everybody's here. Just kind of waiting a minute here. Hello, SC. Brussels. I saw Phil said hello from Brussels. That's a long way. That's a long way. Hello, Gwen. Still on the right side of the grass. I hear you. I hear you. I hear you. That's right. Every day is good when you get up in the morning, touch your feet to the ground, to the floor, and it's cold. You know, when you can feel the cold in your feet, it's like, okay, it's a good day. Yeah. Michael, you took off today. Looking forward to some learning this evening. Well, so am I. So teach away. Yeah. Yeah. All right. We'll kind of kick it off. Hello, Dom. How are you? Thanks for being here, everyone. So, oh, look at that. But I'm from Venezuela. Nice. Glad to see so many places being here. That's fantastic. It really is fantastic. International crew, yeah. Okay, let's get started. Wow, what can we say about today? The first thing I want to do is just start with this SPY chart right here. And it's what I call my dark chart. The red line is the 200 period moving average. The yellow is the 3 exponential. The white is the T line or the black line. And then the green and red dots, that's the trend indicator. You know, it's hard to paint a bullish picture here now. And you guys, most everybody here knows, I should do this in red, shouldn't I? It's hard to paint a bullish picture here at this point when we're moving down like this. And also note, let's see if I can do this. Well, we're going to do it this way. Those red dots right there. We're underneath the red dots here. Price is well underneath it. We'll look at a chart with price on in a second. And now the 3 and the 8 are breaking down through it as well. So it's just really hard to paint a bullish picture right now. And as most of you know, I was absolutely bullish right here. Absolutely. And I will be, probably should do that in green, shouldn't I? There we go. I was absolutely bullish right there. Now I'm absolutely bearish, okay? If price was to actually turn up again, it's kind of weird with a dark background. I'm not used to the colors. Some colors I can't use, and some type of tools I can't use in a black background. So if we were to turn bullish and those green dots turn green, then I will be absolutely bullish again. So for me, it's all about what the color of those dots are doing, because it fits the trend that I like to trade. So, but right now it's very hard to be bearish. So just want to point that out. Let's go back to this chart over here. There we go. Man, that just wakes you up going from that dark chart to this white one here. Couple of things I want to remind everybody of is we are coming up to earnings. Earnings is starting, so be aware of that. One of the things that I'm going to do here, Bank of America, the SPY doesn't have it. So one of the things that I've done with TC2000, and honestly, I think a lot of people do that, is you can put their earnings date up here. And I think a lot of programs have that. Okay, there's nothing special about it. But it's nice to have it on your chart, or at least it's nice to know when you're looking at something, if you're about to buy it or short it, you can at least acknowledge that, okay, I know that the earnings are when the earnings are. So that's something I think we want to pay attention to, the earnings coming up. Also want to remind everybody that Friday, the market is closed, so this is a short week. Just remind people of that. It could be I'm the only one that forgets there might be a holiday, so maybe I'm the one that needs reminding here. All right, let's take a look at the charts here. All right. So today in the members room, I posted. I don't have the member. Well, I did post it in this room as well. In the free room, I posted today, the SPY charts are not looking good, and they're not. They really are not. Here we're in this downtrend, and we've got this gap down yesterday. We've got a little follow through today. We're below the 50-period moving average. It's just not looking too bright here. So for those holding out for those long trades, just stay patient. I'm absolutely positive we'll turn back up for at least a relief rally. I'm positive of that. Just can't say exactly when. We might start running into a little support around here, around this 428 area, low 428 area. But until it does, I think we need to, keep an eye on the price here. Another thing too is something that's happening that I'm seeing with a lot, and hearing from a lot of people, is they're getting chopped up. And after talking with them, probably the biggest thing that I see is rushing into something. So let's say, for an example, we do get down here, and then all of a sudden we put a bullish candle in. That is not a buy signal, folks. Not. It wasn't yesterday. It's not today. It's not going to be tomorrow. And in 3 years from this date right now, this is never going to be a buy signal. Not ever. But yet, there's always these folks out there trying to snag that bottom, and it just doesn't work out. It really does not. The fact is, we're still in a downtrend, and what we need is, okay, get bullish, but we need follow through to break out over that downtrend. We need to test, and then we need to move up over that high. And I'm just guessing on those, okay? So just because we put something in here, and just because we have one candle up, doesn't mean it's time to be buying. Today I talked to 3 people after the market closed, did kind of wasn't really coaching, but worked with 3 people. And all 3, it's the same thing. Trying to catch those quick turns, those quick turn everywhere. Long, short, quick turn. Not just on the market, but on charts. And they're getting chopped to pieces. One thing is, now that we've broken down to the bearish side, the long charts are going to be short-lived. They're just simply going to be short-lived. Not to say that there's not longs out there. In fact, we're going to look at some tonight. In fact, you're going to help me pick some tonight. I hope, anyway. You're going to help me pick some. Same with short charts. You're going to help me pick some. Hope that's what you do. So be a little careful there. UVXY, one of the VIX tools. If we just take away for a moment that it is one of those VIX tools, this is a bullish chart right here. Every which way from Sunday. A low, high, higher low, and we're still trying to make that higher high, but we're doing it with positive candles. And we can draw a line from these lows right through these candles and come up to these lows right here. And then we'll just draw a line right there. And this is an inverse head and shoulders setting up. could be a bullish W pattern as well. We'll use this color black here. So here we are down and then up, and here we are down, and there we are up again. We can also, I'm going to use now red. We can also draw this a little bit different. We can go from, you know, up here down to this low, then to this high, then to this low, and you can see how it's. You know, you can look sideways at this at all you want, but you've got a W bullish pattern in the making here. Not so good for those long charts. So be careful with those longs. I know a lot of folks like to trade longs. I'm not ashamed or not mind. I don't mind admitting I prefer to trade long, but if there's no long charts out there, then you know, you have to go. For me anyway, I have to go with where the power is going, and the power is not to the bulls right now. Power's to the bears. What else? What else? There was one more thing. Oh yeah, we still have room in the rounded bottom breakout class. In fact, let me do this right here. We still have room in the rounded bottom breakout class coming up on the 23rd of April. So if you probably have received an email on it. If you're interested, you might want to save that spot in here. This is not a rounded bottom breakout. But one thing I'm doing because of the market, make this decision a couple days ago, because of the way the market is acting, the rounded bottom breakout coming from the bottom like this, much like this chart, but this is not a rounded bottom breakout, is really a mirror image of a blue ice failure. It's just an absolute mirror image of it. So I'm going to add this to the class. So I know we said it was going to be about 2.5 hours. It could definitely be a little bit longer, but I will do my best to keep it within that 2.5 hours, but I'm not going to cut anything short. So odds are it's going to be a tiny bit, little bit more than 2.5 hours when I start adding in the bearish rounded top or blue ice failure. So you're probably wondering, why am I showing you shop? Really? I'm wondering myself. Let's take a look at a weekly chart. There is a failure up here, a bearish, the failure of the blue ice failure. That's what I want to show you. And I've got charts here. I can find one real quick. Here is a nice AMD, that blue ice failure. So while we're here on AMD, let's talk about this. As I go through these tonight, and maybe some of you can see these charts, I know it's pretty small, but I really would like a little bit of help picking some stocks today, and let's come up with our 10 that I said we would. But if somebody likes one of these, if you'll type it in here as we look at it, if you really like it, just type in the ticker symbol and the word like. And then I'm going to flag that, and then before tonight's over, we will kind of look at those again. Okay, they have to be on this list right here, Mark. They have to be on this list. Okay, any one of these two lists that I'm showing here. Now, don't get me wrong, Mark. Toward the end of the night, I'll certainly be more than happy to look at any chart you would like me to. Okay. So remember to write the word like next to it. Otherwise, I'm just going to assume you're sharing a ticker symbol. Okay. Alrighty. So let's, I'm actually going to start from the top here. We're going to start with a short. So here's the weekly chart. Now, something I don't normally do is really look at a weekly chart. I'm not much of a weekly chart trader. That doesn't mean that I don't peek at weekly charts. It doesn't mean that I don't peek at monthly charts sometimes. Now, that's rare, but it happens. I certainly look at daily charts, 2-day, 3-day, 4-day, and yeah, 5-day, the weekly chart. And right now, there's a lot of charts presenting a weekly failure, and we're going to be looking at those. And then we're going to be looking at the daily on how we might trade it from the daily chart. So that's one of our goals here tonight. So let's take a look at shop. Shop. Here's your weekly chart, and you can see how that we're down. we rally up and rally down, rally up, and we're trying to rally down again. We're below the 200 period moving average. The topic for tonight was tin charts and why I like them. So this is what I want to do. I want to put out why I like them. I like this one because the weekly were below the 200 period moving average. I like it because this chart pattern right here is what they call a dreaded H pattern. And we get below those lows, and that's where the good money starts coming in. So that's something to keep an eye on. Let's take a look at the daily chart. Here's the daily chart, and here's a really nice blue ice failure. Blue ice is nothing more than a chart pattern created by a gentleman named Dave Elliott. You might know him by First Wave. I always like to give him credit. He's no longer with us, and so I always like to give him credit for this chart. It is one of my favorites as far as a shorting goes. And really all it is failing a major moving average, and the major moving average happens to be the 50 period moving average, and it's blue. See right there, I can probably maybe should make that a little darker, hadn't I? There we go, a little better. So that's where you get that blue ice failure right here. Notice on the daily chart we have a dark candle, light candle, dark candle, a bearish candle, not so bearish, and a bearish candle. This is what we call an Oreo cookie setup. This is a bearish setup. So I'm going to have to put this up there as a possible like. John is giving thumbs up, and Gwen is saying it's splitting. So the fact of the splitting might keep me away from it. So for now, I'm not going to flag that. Thank you very much, Gwen. Thank you very much, John. I appreciate that. Okay. Now, let's be fair and let's look at some longs along the way. So let's take USO. Look at USO here. USO is coming up quite nice. A little bit choppy, but I think what we can do with USO is we can, get that move here. If you want to, draw it up at price, you can do that. I don't typically always do that, but I think we can do something like this right here. So a nice wedge. There's no doubt about it that energy is a hot topic right now for several reasons, but reasons that's not what we're going to get into. So I can absolutely see where this could be a buy in this area, but I happen to think the better buy might be, at least for me anyway, on a breakout. So something where we do something like this, get up here and then maybe rest, watch for that entry. And that entry would be some bullish activity in there. Could be a 3/8 trap or something just close to the T-line. That's something I typically like. Staying with the whole weekly thing, let's take a look at that weekly chart. Look at that weekly chart right there. Nice move up and then just some consolidation and a terrific looking candle. Bullish piercing candle on USO here. So I saw up there that somebody wrote USO, so I'm assuming you like that. So let's flag that one. Remember to write the word like next to it, so I know. Okay. SE. Let's take a look at SE. Let's start with the weekly chart here, and you can see that the weekly chart, we've got this downtrend. It's been pretty steady. It's been pretty steady here. Sooner or later, when a chart is down enough, sooner or later you get that bullish relief rally. It's got to breathe. Charts just have to breathe. So here we breathe. We've got a little morning star type kind of signal, bullish engulf anyway, moving up. And then we kind of pull back here. And here's that bearish H pattern again, and where we're down and then start rolling over. You see the H in there. So if we come over here to the daily chart, take a look at that, how we're looking at that 50 period moving average as that failure in here. Even if this runs down and fills that gap, that's 15-16%. So I have to put SE and I'm not going to flag it unless somebody says something. MRO, maybe for the bullish side. So we were having a discussion in the Hit and Run Candlesticks room today, and actually it was one of the trial people there that started the conversation off. So I mean, I appreciate that. I really do. When somebody that's just, on one of our 30-day trials come in and they started off, and we were talking about the scanner, and I'm not going to talk about the scanner here tonight, but we were looking at these the difference between maybe buying a chart that's down like this versus a chart that's trending. In light of what the market is doing, which I think is choppy, tough to trade, in light of all the problems out there, and we're not going to get into the problems really. We're chartists, but we have to acknowledge a few things out there. But let's just stick with the charts. What I'm finding is the best trades are coming from charts that are bearish down, maybe rally up and pull back, or charts, and since we're here, charts that are strong trends. Everything in the middle seems like every hour is a new hour. Every top of the hour, every bottom of the hour is like something new for it. It's crazy dizzy is what it's like, and traders are getting in them. Traders are getting out of them. They move a little bit. They don't move a little bit, and it's just nuts. So one thing, like I said, I'm finding is if you're going to be bullish, maybe seriously consider the charts that have been proven themselves to be bullish. Charts bullish, yeah. Charts for to trade bearishness. Maybe those charts that have proven themselves to be bearish. So, man, a lot of people like MRO. Thank you very much, by the way. So I'm going to flag that one right there. So anyway, MRO, what I see in MRO, and I'm going to, again, go to this weekly chart. And this is, like I said, you guys don't see me go to the weekly chart as much as I'm doing right now. Heck, I've looked at more weekly charts already than I look in a month's time. And the reason I'm doing it is to take away some of the noise. That's what I'm doing, is trying to take away the noise. If you look at the daily chart, look at this thing. It's noisy, 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 noisy. Up, down, up, down, up, down, up, down, noisy. It is moving sideways. I can clearly see that. In the weekly, it kind of, I'm not going to trade it from the weekly, but what the weekly does is it calms me down a little bit. While the daily makes me a little bit nervous just because it's choppy. I want to wait for, these big higher moves. But if I look at the weekly here, man, look at that. If we take into account that high right here, take into account these candles, I think they're doing fine. Look where we are. We're doing really good here. So I think if we come over here to the daily, we now have ourselves a nice little bottom in here. Anything below that low, I wouldn't want it. Some traders might pull this back a little bit, give yourself more room. Some traders will do that. That's perfectly fine. I think I'm going to just move this right here at the low. Now this becomes a pretty nice trade. And I would love to see some kind of entry. And we'll keep it up there, right up in there. I'd love to see an entry there and, move higher, of course. So I like that MRO myself. Michael likes MRO. Ron, Carol, thank you very much. Oh, we already flagged it, okay. Stan's asking a question. What has happened in history to oil stocks during inflation? I have no idea, Stan. I really don't know. I guess one could go back and, maybe there's some paper on it or something. Maybe go back and study the charts, something like that. Slim there, yes, I like the weekly idea just did that, and it really slows down on shorts. It does. It calms you down a little bit. You don't see the choppiness there. All right, let's take a look at SE for a short. Here's the daily chart. We're failing that 50-period moving average. I don't know why that blue line is there. And here's the weekly. One of my, I mean, I've probably got, I don't know, maybe 6 or 7, 5, 6, 7 favorite setups. I don't really have that many, and I don't think 5, 6, 7 is too many. But really, that's all about I have. And one of them is a strategy bouncing off of a major moving average. And the 200 right here, that's that red line. That's the 200-period moving average. That is one of those charts that I like because of that. So here's SE here. Here's SE. And, you know, there's part of me wants to draw that trend down like that. And part of me just wants to say, there's the bearish H pattern. So I hope everyone can see it setting up. Here we've moved down. We've tried to move up. Are we going to move up here? I don't know. I can't say that we're actually going to move higher. Right now it looks short to me. I'm going to go to the daily, and this is where, if I'm going to trade the short, this is where I'm going to place my trade right in here. And my stop might be over the T-line probably a little bit. That might be kind of high because I see this is 10% risk in here, so I'm not sure I'm going to be able to go with that. So let's just assume we're able to get an inside day maybe tomorrow or the next day. Well, an inside day would give us a 3%. Actually, maybe I could if you look at it that way. So that might give us a 5%, depending on where we enter the trade, okay? I mean, if we enter the trade really low, then I'm not going to be able to use up here for a stop. I have to bring that stop down a little, keep that stop a little bit tight in there. So I see there's a lot of folks here that like SE, so I'm going to flag that one for the short side. Thank you very much. Let's take a look at DVN. There's a lot of energy stocks out there. Again, you look at that and you can see, I mean, I can clearly see the rally up, the pullback here, and now we're moving up. I can see that. I can also see we're a little toppy up here. So what's a guy to do? You know, are we going to wait, you know, for that breakout, for that trade? I'm just going to go look at the weekly, see if it makes me feel any better. And it does. Look at that hammer. Here we're up, and we're actually just making a bunch of inside days. So I think what I'm going to do is put a line right there, and I'm utilizing this candle in that wick area in this candle a little bit. I think that's pretty fair. I like that idea. So now I can see exactly where my entry might be on follow through to the upside, something like this right here. So we rally up. I like to see a rest, or, you know, if we just have that rally, and then if we have an inside day bullish candle, that could be a long in there, or that follow through in there. So I think I like that one. See, nobody likes that one. Oh, Ron likes it. Okay, there we go. Now let's look at DocuSign for a short. Here's DocuSign. Again, we've got that blue ice failure set up. DocuSign was one of these that I've got on the watch list actually for a long and a short. Long and a short. The long would have to be up into this area, above the 50-period moving average, and that would actually make it a rounded bottom breakout. That would be the start of that rounded bottom breakout. And there's nothing to say that it can't turn into that. If we were to draw a line just straight across, right here, straight across, there is that possibility that we see some downside, you know, somewhere in this area, and then the bulls turn it around. And if that happens, we now have ourselves inverse head and shoulders. Right now, don't get me wrong, right now it's a short, okay? It's just one of those charts that I know I have on both sides. I'm not interested in being long down here. I'm interested in being long up in this area, or even in this area, or even for those that really don't understand the round and bottom breakout, even long if it gets up here to the dotted deuce. But it's going to have to get up there first. But right now, let's talk about the short side. We are definitely failing the 50-period moving average. And here is that weekly chart. You can see there's the 200 right there. We rallied up and we're starting to roll over. Once again, making that bearish H pattern there. Okay, bearish H pattern. So DocuSign is one of those. Todd there is asking targets for DVN. So let's see. I was fooling around with mine the other day, so I hope it doesn't put egg on my face here. First, Todd, I'm going to show you a redneck way, of finding a target. Okay, this is the redneck way. Is just grab yourself whatever. I don't know what kind of program you have, but TC2000, you can put a line up there like this, and here comes the dartboard. Yeah. So it's kind of a measured move type thing. So we can come over here, and this just might be, that might be in that neighborhood of a target. I'm going to change the color on this to something obnoxious. All right, so something, something like that. You like redneck? Yeah. Yeah. I would tell you where I'm from, but this is being recorded, so I'm gonna leave that one alone. But redneck part of the world here. So that's redneck way to do it. Another way to do it is this cool little tool right here that what's it called? Fibonacci projection. This could give you some ideas. And I'm going to take from this low up. Whoops, I did it wrong already, didn't I? There it is. And I'm going to move this up to this low. So what I'm doing is I'm going from this candle here. I'm going to this candle. So I'm taking that move right there. All right, that move. And then I'm going to come down. This candle looks like it's the lowest. So I'm going to use that candle right there. Now, and there we are, right in there. So now we've got some possible targets in there. I'm pretty close with my redneck tool. Not too bad. I'm in that neighborhood. I'm okay with that. So from there, let's get rid of all this nonsense. And there's you some targets. 65, 35, 69, 80, 73, $74 up there. So that's some ideas there. And then there's J. David comes in. Thank you, by the way. Comes in with the fact that there's earnings. Thank you for bringing that up. Seriously, because I have a horrible habit of forgetting about the earnings till we're well through the earnings. Then I'm trained to look at that again. Thank you very much. Now, the earnings are on 5/2. Today is 4/12. I personally think there's plenty time to make plenty of money, but some folks might not. So that's trader's choice there. Trader's choice. Let's see, TG, how do you manage taking trades long and short only to have the market snap back the other way in this chop? It's hard, TG. It's hard. It really is. Look, I would love to sit here and tell everybody that hey, look, everything is going great. It's not. I would love to tell everybody that, look, just do this and do that, do this other thing, and you're going to be just fine. This is a tough market. I'm not going to kid with you about it. I'm not going to try to tell you something that's not there. It's hard. Be very picky. Wait for, Here's one thing I do. Okay, I wait for market commitment. I wait for market commitment. Now, right now, I've got some other things going on, so I've been pretty slack on trading here last couple of days. Um, Other things that I have to do that I've been doing. Um, Market commitment. Right now, I would say we've got some market commitment to the downside. So to be long in this market, I need market commitment. So we can go down as low as we want to go. But market commitment is going to be when you have a bullish candle. We'll paint this one just black. You come down, and I'm just going to make this in 3 candles, okay? And then you come back up like that. So a low, probably should have made this one a high. There we go. A low, high, higher, low, higher, high. I could do this a whole lot better with an arrow. Low to a high to a higher low to a higher high. There we go. That's why I should have done it. That's called market commitment. So I think that is helpful, but that is not a foolproof. You know, there's nothing out there foolproof. So bottom line to your statement or question there is simply, it's rough right now. It is rough. Julie likes DocuSign, so we're gonna go do that. Thank you very much, Julie. Todd, Todd likes Redneck. DVN watch earnings 522. Let's see, SC. Are you concerned that the wick on today's candle? The wick on today's candle? No, because the wick hasn't done anything. In other words, what am I trying to say here? The wick does not change the trend. The wick does not change the trend. The wick does not change the fact that we're under the 200 period moving average. It doesn't change the fact we're under the T line, and the trend indicator doesn't change the fact we're below the 50 there. Okay, doesn't change that. So it just doesn't change that. So no, nothing about it affects me. There is it to me. This is clear as a bell, as bearish. So what if tomorrow? What if tomorrow, tonight, there's some crazy news tonight, right? And what if tomorrow we do this? Welcome to trading. Now we change the game, and it's just what happens. We can't predict this is going to happen. The only prediction we can really do is what the trend is. The trend will stay the trend until it's no longer the trend, and that will change with price. Price will share that information with us, and that's how we'll know. So in the meantime, we have to go. I think we have to go with the trend. So, oh, you mean on DVN? Excuse me. DVN here. Am I concerned? No, I'm not concerned with the wick at all. Yeah, I'm not concerned at all about the wick. So let's look back at the weekly chart. The weekly chart smooths out the chop in the daily chart. It's just like the daily chart smooths out the chop in a 5-minute chart or 1-minute chart. To me, I think the longer term gives you a little bit more information. The faster maybe is for trading. So the weekly chart gives me some information, and now I'm going to use that daily for trading. So the weekly chart looks perfectly fine for me. So if you look at the daily chart, the question, are you concerned about the wick? I'm only concerned about the wick if it breaks down and fails. So something like this. If we get a candle that fails, then I'm concerned about it. Outside of that, no, I'm not. We simply have a low, a high, we have a higher low, and we have a higher high. And overall, the body candle, the body closed pretty good. Now, I will say this. I'm just going to move this line down. You can see we're kind of flirting with that top. So could we see a little bit more consolidation in here? Absolutely. Absolutely. I'm not suggesting, by the way, any one of these charts is a buy tomorrow. I'm not suggesting that at all. What I'm looking at is this chart from my watch list, and when I get that clue that the bulls are stepping in there, that's what I want. See, this is a chart I'm going to have on my watch list, and I'll be alerted from my watch list. So again, there's not a single one of these that I'm thinking could be a trade tomorrow. I can't possibly do that until they trip my trigger. And in this case, my trigger is going to be bullishness, maybe breaking out right in there. That would be what my trigger is, okay? Excuse me, let me grab some drink here. Drinking some of Sam's beer. Thank you, TG. Appreciate it. And thank you for the question. Thank you very much. Lost my place here. Let's see. John is saying pivots are the best read. Yeah, pivots are pretty good. And you can put, TC2000 has pivots you can put on there. There's pivot chart, some pivots right in there. You can probably put it on a weekly chart. And now you've got weekly pivots here that might give you a different idea on targets or different things. So you can see on the weekly chart, this line right here, we're right at that pivot line on the weekly. So let's go ahead. We're pretty close right here. I'm going to go just slightly under that weekly pivot line for a stop. So you can see here that from about right there up to that first pivot point, you've got 5.4%. There's 8, a little over 8, and then we can run up here to 13.5%. So, but yeah, TC2000 has pivot points. I don't generally use them, but whoops, what did I do there? Oh, that's what I did. Doing it wrong. There you go. But they're definitely useful. Yeah, definitely. May says DVN looks like an ascending triangle. It does, doesn't it? I'm gonna get rid of all that. You're right. It does. So we have this top right in here, and then we have something like that. You're absolutely right. Absolutely. Thank you for bringing that to our attention there. Yeah, appreciate it. Thank you. Yeah. Let's see. Let's stick with just these for a little bit more. I don't have 10 yet, I don't think. CVE here, I'm going to skip that one for now. I think it might be a better one. Here's FANG. FANG is also doing that kind of a wedge in there. And FANG starts to break out. Again, if somebody likes one of these, you know, jump out. Ooh, I like this one. I like this one a lot. EOG, I like this. I'm going to actually drop this down a little bit, right in there. Here we have this top. We pulled back, and now we've broken out of this top. I love this 3-bar chart pattern in here. And no, I'm not concerned about the wick. To start with, I'm only going to buy on positive trading. So I could very well buy above that, and then I'll just use the low. In fact, I'm just going to drop this down to the low. There we go. So if price was tomorrow, say for instance, if price was to come down here, I'm not concerned because I'm not in it. I'm not trading it. I'm only going to trade it when it comes back up through this area and we show that bullishness up there if we can take on this top and or break out. That's a nice chart. I like that chart. Look at the weekly. Here we are. I'm gonna try to see if I can find something here. 3-day, 2-day, 3-day. There, maybe there it is. All right. So let's do this. I apologize. I forgot who asked. Targets. All right. Number one thing. Targets is kind of a. I don't know. It's like somebody that uses a cane for sympathy, and the truth is they could run faster than anybody you know. Okay, that's what targets are to me. They're near useless. But everybody wants targets. So, and the reason I say that is, you know, we're going to buy a chart like this based on price action. It's set up. There's no denying it's not set up. So now you're going to buy it based on price action. And as long as price action keeps working, you're going to stay with it. You know, you put in a candle that looks like this. What does a target have to do with anything? You're going to close it out, or you're going to take 50% off the table, or 3/4 of it off the table. So targets to me are, like I said, they're like some dude that walks around with a cane, but he can run faster than most people in town. So kind of useless. But anyway, so let's work on the targets. And the 3-day chart points it out really, really well. We have a low and a high. You know, yeah, we have a higher low here. Actually, I wish it was spread out a little bit more, but yeah, that's what I'm going to do anyway. And here we're going to go grab that retracement fib tool here and do something like that. And then just bring that over right there, kind of close. There we go. So there's just some targets. I mean, if it, you know, if that, you know, if that's helpful, and I get it, you know, it's always helpful if you can see above you, I guess. If you can see something up there, I can see where it's helpful. There we go. There we go. I just don't want anyone to think just because there's a target up there means, you know, a line means that, hey, that's where we're going and want to fight about it, kind of a thing. And it doesn't mean that's where we're going. We're going where price says we're going, and you have to evaluate price all the time. I'm going to flag this one. I like this one, so I'm gonna flag it. Let's look at AMD. AMD, I think, is a short. I think it's a bit overcooked right now, a bit overcooked. But if you take a look at that weekly chart, this right here is a doggone pretty blue ice failure up here. And on blue ice failures here like this, and this is my favorite, where the 50 is above the 200, because when we start failing here, the next areas I'm going to look for without question is the dotted deuce here and the 200 period moving average. Now, from there, I might tighten it up with some price action, okay? But right now, this is what I'm going to look for. Now, again, the charts I'm looking at here are for the watch list. They're not to be necessarily traded tomorrow. So as I see the targets that I might look at, I might see where it might go. So here's that daily chart again. Now, it is definitely overblown in my opinion. So what I think needs to happen here is a little bit of a relief rally. And actually, let's come over here, and we're gonna put a little line right through these candles. So a nice little relief rally, and then we start to see some kind of failure here. That could get us now. I apologize. I really do. That could now take us not only down through these lows, but also down through these lows, and that's how we get down there. So I want to stop right there for a second, and I want to share one of those little tidbits with everybody that I think is a diamond in the rough. I think it's a jewel, and that is not looking for every new shiny stock that steps up. Man, I got to tell you, hang on 1 second, please. Hang on. Thank you. I had to get that frog out of my throat. So, diamond in the rough, I'm going to share what this is to you. And one of the biggest mistakes I think a trader can make, I know one of the biggest mistakes I make, is chasing that new shiny thing, you know, the new hot stock that's popping up, that stock that's ripping one way or another. Oh, we need to go chase it, or You know, it's just stick with what you do best. And this is where a watch list comes in. So I see AMD as going down more until it's not. I mean, that's what the chart is doing. But I don't see it as a buy right now. So this is the chart that I want on my watch list, and then I want to wait for that best time to trade it. It is a blue ice failure on the weekly, so I don't even need to look at the weekly again. I can just stay right here on the daily chart. So what I'm going to look for is I'm going to look for that entry. It's not going to be right there. Okay, it's not going to be right there. It could be right here, but I'm going to use the T line and the trend indicator here. So I'm going to look for something. You guys have all heard 3/8 trap, or something near those moving averages. I love using moving averages, and I love using those too. So it's not going to be up here. It's not, because if price actually went tomorrow from here to here, I don't know that I'd be looking short on this. I'd be setting this up for a long, because that'd be one heck of a move. It would tell me that, uh-oh, there's some bullish interest in this. So it's going to take a bit to get up there, and it may be over here that it does. And that's where I'll start looking for that trade. You see how that trade may work out here like this? Remember those H patterns we were looking at? You see how that could possibly be one of those H patterns here? And this is, by the way, just the opposite of a J-hook continuation pattern. This is an H continuation pattern is what it is. Let's see, let's go just a couple minutes here. ET, and then I'll be more than happy to take, if you guys have some charts, we'll take a look at them. So look at ET here. Another one of those energy stock. It's setting up, and it's one of these stocks that look at that trend in there. Man, I mean, the 50 is just rocking. We've crossed back over the 200 here. We've come back and tested it. It's just doing a great job. We've broken out of these highs over here. We've got this J-hook continuation pattern over here. I'm thinking to myself, why wouldn't I want this on my watch list? Why would I not want it? Some traders are going to be, you know, snapping, grabbing another tool here. There we go. Some traders are going to obviously snap it up today. Other traders are going to snap it up tomorrow. Some traders are going to wait till it breaks out. All those decisions are correct, by the way. You're the trader. You trade, you know, what you want to trade. And I honestly think a buy in this area is perfectly fine, because what you're waiting for or looking for is for the chart to move up like that. So all this is a negotiation for entry in this area here. That's all it is. Hasbro, look at Hasbro. So one has to wonder, with inflation and talks of recession and all this stuff, you know, our kids going to get toys this year for Christmas. So keep an eye on Hasbro. You know, it might be one of those short trades. Check out the weekly chart. Look at that failure of the 50-period moving average all through there, and the failure of the 200. Nice little failure right there. Hasbro has some serious potential to the downside. Let's look at the SPY daily. We've all seen it. Look at the weekly on the SPY. And right through here, I was very bullish. I'm bullish until I'm not. I'm bullish until the trend changes. The trend has changed. So now I'm bearish until the trend changes. Good example. There we go. Good example right here. So let's get this tool out. Make it yellow. It'll stick out good. There we go. So look at that red right here. I'm bearish. Whoops, wrong tool. There we go. Bearish until you're not. Bullish until you're not. Bearish until you're not. A little choppy here, right? A little chop, chop, chop. So here you're a little bearish until you're not. And there you are right there. You can see here you're bearish here until you're not bearish, and that would be way down here. And then you're bullish until you're not bullish, and you're right there. So anyway, the trend indicator works out really good here. And you can use any moving average you want. I use 17 exponential. Just fits my trading style. But you can see the blue ice failure here setting up. So as we look at the daily chart, the trend is still the trend. Trend is still down. We can put lines all over the place where we think we're going to bounce, but we'll bounce when price says we're going to bounce. That's when. All right, we'll call it. We'll call it. Do we have enough, or does anybody want more? Maybe you guys have some. Let's take a look at them. I've got plenty here to look through. Absolutely plenty to look through. May like CBX. There we go. CBX is along. I like that one too. Nice chart. Yeah, we don't need that, do we? Yeah, let's put that up there. There we go. So here we have a high, we have another high, and here we've broken out. That's fabulous. So here is where we get into this chart, the chop that we're in. Okay, this is the chop we're in. And does this really look good? I think it looks good. We've broken that trend, and this is where we want to go to a longer time frame, not a faster time frame. Here's a 2-day chart, 3-day chart, and what I'm looking for is something to tell me that it's a smooth chart, that it's working. Okay, not just a doji hanging up there. I want to see something in here. So 3-day, there's a 4-day, there's a 5-day. I usually stop at a 5-day chart. But look at that. Doesn't that chart just look, I mean, a great looking pennant wedge in there. Absolutely wonderful. So let's go back to the daily chart. Once again, we have to be careful not to chase that shiny thing. This may not be a buy today, and it might not be a buy tomorrow. Might not be a buy the next day. But it doesn't change the fact what the chart is doing. We ran up, we've pulled back, we came up here and made a high, we made a higher low, pretty much went sideways, and then we broke out. We're going to use this line, technical analysis. We're going to connect this high with the next big high. Here we are. Let the bottom go where it will. That's a bullish chart. It doesn't mean that the buy is right now. We're not going to buy it just because it's there. Buy it for a reason. Buy it for a reason. Doug there at Right Way Options, he uses a couple of terms that I think is top notch. I mean, top notch. He uses terms like deliberate. He uses terms like price action. So this is not where you're going to make money. This is where you're negotiating an entry. So let's look at deliberate price action, because the trade is up here. This is where you make money, not here. This is just a negotiation for entry. That's all it is. That's all that is. So I like that one. I'm going to flag it. I'm currently in VLO. Didn't exactly do what I wanted it to do here. But if you look at the weekly chart, it's doing exactly what I want it to do. You know, there's a little room in here that I don't particularly care for, but the chart is trending. Price is still above the T line. The daily got a little, a little down there. So we'll kind of watch that, see what happens. Here's a 2-day chart. We're still there. 3-day chart. We're still there. You see, this is what chop does to us. we see charts like this and we start, oh man, well, let's just go take a look at what it looks like. Yeah, it could pull back a little bit, but look, it's still a very nice chart. Look how we've broken out right here. Look at the touch, broke out. Here we rallied up and pulled back. Look how we've broken out. Look how the chart is doing this. Lows, highs, higher lows, higher highs. Is it due for a higher low? Sure, maybe. So anyway, sorry, I didn't mean to get over there. We were looking at CVX. Anyway, I think that's a nice chart. Sorry, my chat didn't go down. So let's see. What is the meaning of? Stan, we just simply don't have enough time tonight. This is a good thing to Google. Do something like that. You know, we can talk about those later. Just not enough time tonight to get into that. Let's see. Hello, May. I got in late. So are the symbols to the right of 412 rising possible shorts, or are they also possible longs? May, here's the thing, May. What take USO? Does that look long or short to you? Take SE. Does that look long or short to you? So, you know, AMD. Does that look long or short to you? EOG. Does that look long or short to you? So, kind of, they kind of tell what they are. But if this is where if you need help determining why that's a short or why that's long, this is the question to ask maybe, okay? You know, do the Qs look long or short? Does ET look long or short? Things like that. So please ask another question, and I'm more delighted to help, all right? I try to look into the questions. So it is important that you couch your question correctly. Because I do try to, well, what are you really asking? And I want to make sure that you know what a long looks like and what a short looks like. And that's why I did this the way I did, okay? I hope that makes sense. EOG, I like that one too. We flagged it already. Thank you. I'm already long ET, APA. Man, you're long all the oils. So I hope to God that they don't tank on you. Be careful putting all your marbles into one. I mean, I love all those charts you're looking at. Okay, all those charts you're in, I love them. I absolutely love them. Just and I love them long. Just be careful putting all your marbles into one basket. What is the dotted deuce? The dotted deuce, let's see here. The dotted deuce is the 200 period moving average. 200 period moving average. It's the average type is it's front weighted, and it's the average of the lows. So front weighted, not the simple, not the exponential or the whole. It's the front weighted. And the low, it's not the last open high, it's the low price. So it's measuring the lows right here. I use this a lot in the rounded bottom breakouts. That's the class that's coming up on the 23rd. And I use it a lot on intraday charts. I use both these a lot on the intraday charts. So, hey, before we get to the end, I should have mentioned this before. This is an open room tonight, so everybody's invited. I want you to keep in mind that those that don't have memberships, and thank you very much for those that have memberships, to both Hit and Run and/or Right Way options. I truly appreciate it. I know Doug does as well. You know, there is that trial out there for $49 for either one, or you can do both. Your choice. So keep that in mind. Thanks. Julie likes AMD. I like that one too. while I don't particularly like it for a trade right away, I absolutely love it on the watch list. Yeah. And then David there is saying earnings on the 26. Yes, thank you, David. That's something to keep in mind. Please, please, please remember, everybody, earnings season is approaching. Earnings is approaching. Sam, is GLNG extended? No, I don't think so at all. No, it is not. So I'm suspecting what you're looking at is all of that. I mean, everything. Is it extended? No. Every trade is a new trade based on itself. I just made that up. So, and a new trade starts with some sort of supporting area, or something that kicked the chart off, something that fired it up, some kind of spark that got it going. And that's what creates a trend. I'm going to do that over here. That's what creates that trend. And then profit taking comes in because traders like to take profits. It's just the way it is. I mean, it is what it is. So I wouldn't fight that idea if I was you. I wouldn't fight that. So profit taking comes in. So what happens? Price comes down. Okay. The trend is still there. I mean, your extension that you spoke of is still there. The overextended, I guess. This is the new trade, though, from where it broke out. You know, for whatever reason, something happened here. It kicked it off, broke out, and then we have this pullback. And now we're going to look for it to continue. To continue. So when I look at this chart, here's what I see. Let's start with this. So what I see here is looking at this. Here we break out. Here we come up, we find a top, and then we break out. We come back, we put a hammer in, and what do? We go higher. So I think what I'm going to do is, it's all because of that hammer. The hammer stopped it, bulls came in, boom. Here we've pulled back. See, it's this game over and over and over. Up, we pull back. And now what are we doing? We're looking for that next spark. And then what's going to happen? Profit takers are going to come in. And then we're going to look for that next one. And if you go back through this chart, just to prove my point, look at this. Up, back. We'll go right to the high up here and back. Otherwise, we're going to be drawing on this thing all night long. See what I mean? It's the same thing over and over. And it is that until it's not. It's that simple. It's that until it's not. So, Sam, I still like the chart. Do I see, that shooting star up there? Of course I do. Of course I do. So what would be wrong with waiting for a breakout? Or more rest, perhaps. Okay. Carol likes ET. Did we flag that one? Nope. Thank you. Yeah, ET looks nice. Thank you very much, Carol. Ron, I'm in late. I'm in ET for a stock trade. Oh, okay. Nice. I like it. Way to go. There's John. John is, and this is a great point, you guys. John, it's a great point in the sense that this is something John uses, and if somebody here finds it useful, I highly suggest using it. Pivot points. So it's giving them clear projection, is what he says, and I absolutely agree. If whatever tool, whatever tool you can find that gives you that information you need. This is a weekly chart, and look where it stopped and stopped right there. Now, that doesn't happen all the time. It's just like all tools out there, nothing is perfect. But now you can see where you might see some targets up here. One nice thing about pivot points, it does help with stops, I think. I do like that. So let's get this one out of the way. There we go. So the bottom two possibly stops, the top two are targets, right? So there you go. Now there's no way in heaven's name I'm going to use that one, not to say that somebody might not. So there's a here's a nice stop based on the pivot points. 1120, and there's some nice targets. Thank you very much, John. Dow, DOW. Ooh, let's get rid of these. Makes my eyes go buggy. There we go. DOW. So Dow Chemical here. It's definitely trending here. I like the overall trend, what it's doing, and I see this little excitement over here. We've been up a couple of days. We're just now getting into resistance. I'm probably either going to need to see a pullback or a breakout, one of the two. So when you're looking at a stock like Dow Chemical here, this is one of these stocks you can hang your hat on. I mean, this is one of those take it home to mama kind of things. Strong, steady, that sort of thing. And you can clearly see this bottom that we've got in there, which is a very, very nice bottom. So Dow Chemical, I have to wonder, if you're willing to hold maybe to a pullback down here to the 50, which is only we'll call it 3.5% away, not horrible. Certainly is a buy anywhere in here. Or you wait to that breakout. And it's just one of those, kind of a steady eddy sort of charts. So I'm all for it. I'm all for it. Let's look at that weekly. Look at the weekly chart. Man, that really shows off that bottom. Very nice chart. The question is the whole entry. You've got this resistance right here. So if you're one of those people that you get squeamish up here, if price moves up and price gets a little testy right in here, if you're squeamish, don't go in it. Don't go in it. Don't go in it. Sorry, something popped in my mind. I'm probably better off I not talk about it. Don't get in it. If you're, like I say, if you're squeamish, if you are, wait for the thing to break out, because you are facing resistance up here. And I don't look at this resistance as necessarily being bad. This is a steady eddy. So how about Oxy? Yeah, go after the shiny thing, right? I'm kidding. Oxy, all the energies look really, really good. They really, really do. And you can see it's on my list here. I'm going to flag that one. So look at the weekly chart. Is it building something you like? Because the daily is not building a doggone thing I like. It's too choppy. It's too sloppy. I don't like that. I don't like chop slop. And that is chop slop. I can tell by the ticker symbol it's in that category that they're kind of hot right now. But it doesn't change the fact that it's choppy sloppy. So I'm going to go to a weekly chart. You know what? I like that. It looks good. So maybe now I ignore the choppy sloppy. I'm not interested in buying it now. I want to buy it when the bulls come in. So how about on a breakout? We break out over all that choppy sloppy right in there. I love the chart, by the way. The question is the entry. That's the question. XLF short play. Yes, it is. Be remembering those banks report very soon. This has a blue ice failure here on the weekly chart. Ugly, 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 ugly. Definitely looks like a short. Just keep in mind that some of those banks start reporting. So if they report good, that could turn this right around. Right around. Daily chart looks short to me. Looks very short. Just watch those earnings. UEC long. I'm going to have to say yes, because the trend is your friend. We're coming up to resistance. If you don't like it, wait till it goes over resistance. If you don't like it, let it pull back a little bit, just like that. Weekly chart. You can see that weekly. That's a nice weekly chart. That's really nice. Low, a little bit of a high, higher low, higher high, higher low, making a higher high. We're just trying to cut through that top right in there. I'm going to have to say that's a bullish chart. I'm going to flag that. Thank you. I'm going to flag that. It's all about the entry. Guys, here, I believe it was TG. I could be wrong. Yeah, I'm going to take that back. I don't know who it was. Somebody earlier asked, how do you handle all this chop in the market? And here's the thing. If you are one of these traders and you're just going to have to reach down in your soul and say either yes I am or no I'm not. There's no in between here. You either are or you aren't. So if you're one of these traders that you can clearly see we're messing around with that top up here, and if price starts getting a little nasty, some people might think that wick is nasty, that wick might be nasty. I'm not saying it is or it isn't, but if you're one of those traders that you get squeamish on this, this is what takes your money away. You know, you enter a trade because, ooh, uranium is a cool thing, right? Sure, I agree, but maybe not for you, maybe not right now for the entry. I like the chart. I think it's a great looking chart, but is the entry right? That's the question. Do you want to enter so close to resistance? Do we have to go chase something so quick? Do we think, looking at the weekly chart here, do we think that this may be headed to an all-time breakout? Might be, right? So what in the world? Why not wait till it breaks out and then go after it? That's a super chart, by the way. All I'm trying to point out is if somebody's looking at this and you're squeamish up here, the first time this thing coughs, be careful, because this is where the market will come in and slice and dice you, because you'll buy it, it'll trip you up. What are you going to do? You're going to sell it. You're going to take a loss. Then the chart's going to move up. You might chase it, you might not. But now you're beating yourself up because you just messed up a trade. And you know darn good and well this is a good chart. You know darn good and well that this is a good chart. There is no reason that this chart doesn't go higher. None. But if you're squeamish and it blinks, it'll chop you up. That's what this market is going through right now. Banks, good inflation and reporting this week. Yeah, well, how's that working out for them there, David? How's that inflation thing working out for them? I'm going to need proof. I need proof. This is one of those things that fish go after shiny lures and cute little flies. Let's don't be fish. All right, let's don't be fish. Let's let the trade work. So here's what I mean. Does anyone think, and no answer, please. We're going to draw a line here pretty quick. Maybe if somebody could draw me a line, I'd appreciate it. Do we think Bank of America can get back to 50 bucks? My answer is absolutely. I absolutely do think so. Now, I don't know whether it's going to be in the next 10 days, or I don't know whether it's going to be in the next 200 days. I don't know that. Here's what I do know, though, and I really could care less how they report. Let's assume they report good, okay? I want them to move up because this is a bona fide bearish chart every way you slice it. I want to see a low, I want to see a high, I want to see a higher low, and I want to see a higher high. From that point, this will be the tradable bottom. And only then will I look at this chart. So why not pick it up early? Do you seriously need that money? Or is 21% enough money? Or do we have to pick up this extra 2, 3, 4, 5% in here? So be careful not to chase the cute little fly or that shiny little lure, because all that equals to is a fish in the pan, and you don't want to be a fish in the pan. DBA, I think I looked at that one. Yeah, DBA, I like that, DBA. long after some pullback. Yeah, this absolutely needs a pullback. No question about it. But it's one of those charts. Here's something I tell folks in the trading room that let's just look at this on a weekly chart. You look at this on a weekly chart and you can clearly see that we're way up here. And then you can clearly see that it came from here. And I'm going to use where it turned from red to green, bullish. And notice it stayed bullish the whole way. Incredible. Great, right? So if you find that you're one of these people, and it, by the way, it doesn't matter. You can put maybe a buy in here or a buy in here. You're one of these people that you see this and you even come close to thinking, man, I wish I would have bought it here. Boy, I wish I would have bought it here or here. Man, sheesh. That's the chart right there you want on your watch list. There is nothing that says this can't go higher. So now trade it. And we clearly need a little bit of a pullback. But this is a chart for your watch list, absolutely. Move long. Move, yeah. I would probably have to wait till a breakout here, but yeah. You've got a nice trend in the chart. Watch that breakout. That, based on the chart that I see right now, that's what I would look for. But yeah, absolutely. May, you're also in VLO. Cool. That's two of us. Yeah, very nice. Ron, you can open. I wouldn't. I mean, I don't know what you're looking at it for. Maybe for a short, certainly not a long. Maybe for a short, not a long, because it really hasn't made a long reason for a long chart pattern, unless you want to put it on the watch list and wait. But right now, you basically have a failure of the 50-period moving average. You're down, you're up here right where it failed again. So I'd be hard-pressed to be long on this until it became long. And for me, it would become long over that 50-period moving average. And I will bet dollars to no nuts. If that does that, it's going to rest, and that's going to give us an entry. Thank you, May. Was wondering if that was what your scanner produced. Everything in here is what my scanner produces. Everything. I don't do anything without the scanner. It's too cool to use. Yeah. So longs and shorts. Yeah. This is TC2000 because the scanner doesn't have. Well, it does, but it doesn't. It's not as good as TC2000 when it comes to holding stocks. So I could come over here to the scanner, and there's a watch list for the scanner, but it doesn't hold them in place as well as this does. So I use TC2000 to hold them in place. But everything comes from the scanner. VGR, long. Absolutely. That's a rounded bottom breakout, by the way. This is exactly the type of chart we're going to be talking about on April 23rd, Saturday, for that webinar. That's a nice chart. So nice pop up. I love that breakout to the upside. And we hit that dotted deuce right there. Man, I got to tell you, that line, it matters. It matters right in there. There we are. So now I would be looking for that 200-period moving averages. For the most part, the next target to the upside. And then from there, you break out. There's still plenty of room for this to move. Nice chart. Thank you very much. Good night, and thank you, Espo. Appreciate it. Thank you. Yeah, Julie, good night. Thank you. You too. Yeah, open looks more like a short at this point. Thank you, Sam, very much. LXU looks better than IMO, in my opinion. IMO must be in my opinion. And chemicals here, I'm kind of thinking you're comparing it to the Dow chemical and LXU. I'm going to have to agree with you on that. One thing about this market, I think I said this earlier, this market likes charts that's moving up in a solid trend. and this chart and this market likes charts that's moving down. Everything in the middle is subject to too much chop. That's what I'm finding. So I have to agree with you here. Very nice little move here. Yepper. FF. Yep, I would agree with you there. FF. Nice trend. Ooh, that's actually a really nice. Look at that. A lot of good upside here. I think I'm going to flag that one. Thank you. I'm going to go look at that LXU just one more time. And, you know, I'm going to flag it. I like that other one there, too. Mike, AMR. Sorry, I had to find my place. AMR. Beautiful chart. Absolutely beautiful. Trending. You can't go wrong. Look, if you look at a chart, and I see right through here, it looks horrible to me. Now, we did break out, so that kind of cleans it up. But if we take that to a longer term chart, it smooths it out. Look how it starts smoothing it out there. Here's a 4-day. Look at that. Weekly chart. Look how smooth it starts getting. So that all of a sudden puts confidence back into this for me. I am going to trade it on the daily. That's what I always do. This looks fabulous. It really does. Look at the volume today. Maybe we better look at BTU. Look at BTU doing the same thing. So I'm going to flag that. What was that other one? AMR. I think I'm going to flag that one. Thank you very much there. Appreciate it, Mike. Slim is asking, what is the max pullback you allow? So first of all, I think I have to explain my trades first. First thing I do is I like to see some sort of a trend. They don't have to be, you know, this long. They don't have to be, but I want to see some sort of a trend. And then I want to, how am I going to do this? I'm going to change the color here and do something like that. A slight trend. This represents the T line, and I'm going to put another green line here, and this is going to represent the 17 exponential moving average, or these green and red dots right here. Notice they're all trending, all three of them. This right here is price. Blue. Let's make price blue. There we go. Price is blue. So price runs up. I'm okay with this little dip all the way down there even. I'm okay with that. However, I'm not okay with anything below that. You'll find that I am not a 50-period moving average trader. I am not. Because it's just me, okay? It's just my style. That's all it is, my choice. Because if a stock, in my opinion, if a stock, let's say this here, was to move all the way back down to the 50, that's ugly as sin. When we move down to the 50 and, you know, some kind of a move like this, you now have to wait for that low, that high, that higher low, that higher high. So it's not that I don't mind stocks being down there, but I'm not interested in looking at them down there. However, I would be interested in looking at them if they came back up. So you go on down there, low, high, higher, low, come back up. And that's just because that's my world right through here. That's all. It's just my world right through there. You know, this area right here. Just my world. That's where I like to trade, right there. Just like that. A choice. It's a choice. Check. Check. Yes. Yes, that would be a short. We'll go look at the weekly chart. Look at that. Nice failure of the 200-period moving average on the weekly. You can clearly see what could be support. That's what's kind of holding it up right now. We fall through, though. I would keep an eye on that 46 level. Absolutely. Absolutely. Thank you, May. Didn't know that. Energy stocks represent 2% of the S&P 500 versus 1% of pre-COVID. Thank you. I had no idea that. What are my thoughts on BX? I think short. Yep, I think short. I looked at that one tonight. Here's the weekly chart, and we've got a blue ice failure setting up here. So I'm going to have to do this. And yeah, it looks like some bulls are trying to dance. Either way, it's not a buy until it breaks out. So let the bulls dance. Let them dance. And it's a short on weakness. So dance in here all you want. This is where to make a trade, and this is where to make a trade. So there we go. Just like that. Dance all you want in here. This is chop zone. This is where everybody gets chopped up. This is where you lose a big toe, a little finger. Your shave is a little too close. Let somebody else dance with it here. Either here or here. HA, did somebody draw me a line down there? Please. Hawaiian Airlines. Chart bullish. I guess maybe I'm wrong here. Yeah, I don't think that's quite bullish just yet, but maybe you're asking something else. I don't know. J&J, it's in a trend. It's in a trend. Yep. I like a long chart with a series of higher lows and higher highs because it shows me a good foundation, and a series of lower lows and lower highs on a short chart. Guys, read what John wrote there. Read what John wrote. Please copy this. Copy this. Copy it and read it 1,000 times before tomorrow morning. Okay? So this is what John is saying. John only looks for a chart that's trending. I used the wrong color. We'll use black here. So John's looking for lows, highs, higher lows, higher highs, higher lows, higher highs, higher lows. I wish they were as perfect as this. They're not. So what's John going to do? Look for entries, breakout entry, entry, breakout entry, entry, breakout entry, entry, so on and so on and so on. Trend. Follow the trend. None of this bottom picking. It just, dangerous is all sin. Dangerous, dangerous. Sam, thank you so very much for putting that line in there. Thanks. Everyone, thank you very much for being here. I appreciate it. I truly do. I'll see everybody hopefully in the trading room tomorrow. And then Right Way Options folks, Doug will see you in the Right Way Options room. You guys have a wonderful evening. You all take care. Be safe tonight, what's left of it, if you're driving home from your office. Sometimes those hallways can be dangerous, right? You guys all have a great night, and we'll see you tomorrow. Take care.